You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Joe Venazzi from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
Welcome back to the Option Block, everyone's favorite bi-weekly source for all things options related. A little bit of wit, a little bit of wisdom, a little bit of fun, a little bit of analysis, some unusual activity, some education, some strategery, your questions, mix it all into the delicious stew that is the Option Block. My name is Mark Longo from the old OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network, coming at you once again. One more time here, at least for today. We'll do vol views from here tomorrow, too. But one more, actually, maybe Mondays as well. So maybe a couple more for the old Southern studio here. So if I sound a little bit different, that is why. Hopefully, you guys will be able to join us live today. It does seem like our partners over there at Mixlr on the live stream side have finally worked out their issues. So I don't know what was going on with them over the past week, but they were pretty much down the entire time. So if you enjoy listening to us live, hopefully you'll be able to do so again. If you have questions or if you have problems doing any of that fun stuff, let us know. Of course, if you're listening to the podcast, you won't notice any of that because you're listening on demand as usual. And joining me as usual, let's see who we got on the old epic palooza that is the Option Block today. Let's start in the tranquil, peaceful hamlet known as St. Charles, where we are joined once again by the appropriately named Uncle Mike Tosaw from St. Charles Wealth Management. Uncle Mike, welcome back to the show. Once again, what are the odds St. Charles Wealth Management lands in St. Charles? It's amazing, sir.
It is. I mean, defying the odds every day. I mean, this is some out of the money deltas and gammas coming in by all means.
Oh, you just got a new tagline for yourself, sir. A new marketing slogan. St. Charles Wealth Management, defying the odds every day. Perfect. Bam, done.
Loving it.
Print it. Get the new cards going. Call up Vistaprint right now while we're on the show. Don't even wait. It's that good. I mean, it's the gold we give you here on the show, Uncle Mike. I hope you're bottling it because it's gold. It's gold, sir. It is tasty, delicious gold. Speaking of tasty and delicious, I guess if you like Maine lobsters, maybe you consider them tasty and delicious. I think he's back in Maine. Let's find out. He is the rock lobster himself, Mr. Andrew Giovinazzi, usually from the quiet Mecca of Maine, but he's been all over the place lately. He came to us last week from La Jolla. We could hear the seals in the background. Last week, he was right down the street from our studio in Chicago there, and this week, you don't know, maybe he's in Puerto Vallarta this week. Mr. Rock Lobster, where are you this week, sir?
I'm in Maine, and I'm not leaving for the summer. I'm all done.
Oh, you're all done. You saw the rest of the
anymore.
country. You're good.
Not until the middle of September. I have no interest in leaving. I don't care. And I even posted a picture on Skype. There's an airboat in my cove, and they're stealing all my claims. So just so you get a little flavor, the three guys working harder than anybody today. They're in there. They're going to walk out with about $2,000 and leave. That's about how it works.
Speaking of flavor, I hear you've been tearing up the social medias about these new Beyond Burgers, sir. Have you been lured to the dark side?
I am tempted to try, mostly because I'm just so old now. I can't eat all the stuff I want anymore. So I need to find. I have to make believe. That's where I am. There's make believing going on.
I'm like you. I'm a hardcore carnivore, so the notion of being vegetarian or vegan to me is just life ending. I could not do it. But doing it in a world where Beyond doing it in a world where Beyond Burger and Impossible Burger exist is not quite as painful. We had our first Impossible Burger last week. That was very good. And the Beyond Burgers are also good. So I would honestly say you can't go wrong with either of them, sir. But maybe if I had to, I only had a little bit of the Impossible, so I can't fully give a review. I haven't had a full one. But the small sampling that I had was pretty darn good. But Beyond Burger was good too. I might have to give a slight edge to the Impossible though. So, but I need further testing to know for sure, sir.
Okay. Well,
do you guys hear what Arby's did?
No. What did
Arby's do?
What do they do?
So Arby's is coming out with meat and within I forget what they called them, but it's like meat in vegetables. So they created a product where it has all the nutrients of a vegetable with meat in it and with like a ton of protein as well. So that's their answer to the Beyond Burger.
I guess their slogan is "We have the meats," right? So I guess now we have the meats in vegetables.
I love it.
Hey, if they're making it healthy to be a diehard degenerate carnivore, I'm down with it. I'm down with all of these attempts. So more power to all of them.
That's what it sounds like they're doing.
Speaking of diehard degenerate carnivores, I don't know if he is one. Let's find out. We are joined in the Fidelity hot seat this week. Once again, we got a lot of twofers and almost threefers here. We had twofer for you, Constantine, recently, and we've had a bunch of other guys fighting to get in the seat. And once again, he's back, the last emperor, Mr. Constantine Vrandopoulou, holding down the hot seat there, the Fidelity hot seat. Constantine, are you a devotee of all things Beyond and or Impossible?
I have not indulged yet. I definitely am a big carnivore, and I've been planning on trying it out. There are a couple of burger joints around here in Jacksonville that actually sell them. Obviously, I'm not willing to go to the store and buy it and try to cook it myself. So I'll try it out at a restaurant first, but haven't gotten there yet. Joining you today from the triple-digit heat index with a ton of humidity in the air from Jacksonville, Florida. I would much rather be in Maine. I hear that you're joining us today from the southern studio still, so you're getting a piece of that as well.
Yeah, I'm getting the nice magic of AC. I hear you guys have discovered this magical thing down here in the southern lands, and it is a wonderful thing, especially on days like today, because you're right, triple-digit heat index where I am as well. And all is right with the world. Let's see if all is right with the markets as we dive on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the show where we tell you, surprise, surprise, what the heck is trading. I do see a few people popping in there to the live stream, so it seems like it's working. So welcome back. It's been a while since you've been able to listen to us live. Hopefully you guys haven't had the shakes or any sort of other withdrawal type symptoms. Hopefully that stream will stay up and running and you guys will be able to do all the fun stuff and more people will get to pile in and we'll get to have a nice raucous crew in there like we usually do. Speaking of raucous, it's another one of these not quite raucous days. It's a weird one, another weird one out there on the street. We had a lot of days over the past week where we've seen Markets kind of steady to rallying, and vol kind of rallying as well, at least in the cash realm. Things get a little bit more dicey when you start breaking down the futures, obviously, where the vol actually is, but still in the cash realm where everybody likes to look. That's been kind of an interesting beast to watch, and we're seeing a similar scenario unfold today. Most of the major indices up, some of them up pretty strong. NASDAQ leading the charge, up not quite 0.75%, but pretty darn close. S&P up nearly 0.5%, and the Dow, ever the laggard, only up about a tenth, not quite 0.2%, about, let's say 0.15. Let's just split the difference right there. Gold taking a little bit of a break today, and crude oil actually up a little bit as well in terms of WTI, threatening that 60 handle yet again, 59.5. We'll get to more crude oil in a little bit on TWIFO in about an hour and change. Listeners, and our old friend VIX coming into Showtime was feeling a bit of the love, up to about 16 and a quarter or so. So not quite a point, but about 3/4 of a point higher. So yet another day where we're seeing grinding upwards in the broad market, and we're seeing grinding upwards in the vol space as well, which is, we're in that kind of in that weird territory. I've been saying that for a while now. Now VIX come off a little bit, only down to a mere 16, so not quite 16 and a quarter, but still feeling a little bit of love out there. VVIX also moving up about 5 handles from our last show. It was about 82. Remember I said when it starts threatening that to break into that 70 handle range, and when it gets to about, when it starts threatening 70s, that's when you have to start watching the volatility of volatility. And we did indeed see that, because it has popped up again to about 87, up nearly 5 handles from where it was this time last show. Our old friend VXX kind of lurking in that same range out there, right about a little bit shy of 27, about 26.70. Pretty much unched from our last show. Let's go back around the horn the opposite way. Let's start in the land of the triple-digit heat index, because I feel his pain. Mr. Last Emperor, what is lighting up the tape over there in Fidelity land today, sir?
Hey guys, yeah. So today is a very interesting day. There's a few things on the list that don't normally pop up on here. So as I was preparing for the show, I'm just taking a look at orders by Fidelity Customers on the equity side of things, and Boeing was leading the charge there as number one, but just got overtaken by the symbol GBTC, Grayscale Bitcoin Trust. So when you're mentioning what's trading, I guess what we know today is that Bitcoin is definitely trading. Bitcoin had a really nice sort of meteoric rise, right? Since December, up around 320%, was just at 14K. Feels like yesterday, and down substantially today. And of course, Grayscale Bitcoin Trust at least promises to track the Bitcoin index, and it's tracking it pretty well today. On my last check here, GBTC is down 19.2%. It's a security that is not optionable, obviously, but trades. Sometimes it feels like an option. It definitely moves that way. Number 2 is Boeing. Boeing is moving a little bit and weighing on the Dow today. So when you were mentioning the indices, Dow being the laggard, and as we all know in the audience, I'm sure Dow is a price-weighted index. Boeing trading $307 a share, down 2%. Obviously, being a pretty high price per name is affecting the Dow substantially. Why it's being dragged down? It sounded like to me on my news check there, the FAA found some new flaws in the 737 MAX, and could potentially delay, right, the return of those planes back into service. And the options market are trading, I would say, relatively heavy volume. They're normally averaging around 104,000 contracts a day over the past 90 trading days, and today it's already at 104 right now, and it's 1:15 Eastern Standard Time. So we've got a few hours to go. I assume that that average volume is definitely going to be taken out. The other names, the top 2 that I noticed that have been moving as of late are the chips, and so Micron and AMD are on the list. Fidelity clients are definitely participating in there. Trying to position accordingly. Those 2 names, I mean, Micron obviously reported earnings. They usually go pretty late, so they're kind of tying, a knot on the earnings season. Here we are going to be awaiting the banks starting to go pretty soon in July. But Micron jumped nicely off of that earnings report yesterday. It was up around 11% on my last check, up another 2.65 right now. But it had a very, very rough go of it as of late. I'm looking at a 3-month chart here, and it seems like once it makes up its mind, it sort of tends to go. It traded sideways in a $2 range between 44 and 42 for the whole month of April. And then in May, it collapsed, right? So from 43 all the way down to 32, traded sideways for what feels like almost a month in the month of June. On earnings, obviously now jumping back up right now, trading at 38. So it just kind of, range bound for a while. And then once it breaks out, it tends to find interest on either side from what it looks like to me. AMD, of course, is another one of those names, and I guess maybe it's up in sympathy. I was looking at the Philly Semiconductor Index, the SOX. SOX is up nicely today as well. Overall, up around 1.25%. These stocks tend to be leading the SOX a little bit. Now, I know that obviously we're all awaiting the G20 this weekend, or at least the results. There's all sorts of anticipations there, and I know that a lot of chips are sort of intertwined in that economy over there. So that's probably why they're moving as much as they are. Obviously, no additional news that are coming through right now, but traders are just positioning themselves going into the weekend. That kind of wraps up the list here, at least in the top 4.
Yeah, you mentioned the Bitcoin. We obviously do our crypto rundown show, and it seems like there's some strange correlation. Whenever I go on vacation is when Bitcoin just wants to move, because the last couple of weeks, this thing has obviously just been on a tear. Of course, a few months ago, it was trading a paltry. It was threatening to break the 3,000 handle to the downside. Oh, how the worm has turned up to 5,000 and 6,000 and 7, 8, 9, 10 recently, then right up to 12, and now you're 13. So it just complete turnaround out there in crypto land. It seems like the days of hand wringing and oh my, with the death of crypto, all these things, all that seems like such a distant memory. And it was only a few months ago that we were in the longest bear market in Bitcoin history. That GBTC is an interesting one. It'd be nice if it was optionable. That would kind of give us a back door into some listed options on crypto, but c'est la vie. It's still an interesting one to watch, and it certainly seems like it has been tracking that upswing pretty well, like you mentioned there, Constantine. Just not even a couple of months ago, it was trading, shy of the 5 handle, now 14 and change. Of course, off today, obviously 3 handles, but it was trading 17 at one point, so had a nice little pop out there. So if those of you out there who are lamenting that there aren't more listed options, or, you have the futures at CME, but outside of that, and really good securities type approaches to Bitcoin, maybe that's an interesting one to keep an eye on. Certainly sounds like the Fidelity crew out there, in terms of the clients, are liking that one. Mr. Rock Lobster, I know you can't get enough of some crypto. So in addition to crypto, in addition to shooing off these clam poachers here in your bay, in the Giovinazzi Bay, what else is catching your eye and lighting up your tape today, sir?
I think there's definitely something to this whole blockchain thing with, I don't know if it's Bitcoin or what, but this kind of encrypted way to talk to people thing. I think there's a revolution there somewhere. I just don't quite know how it's going to manifest itself. But we'll just put that aside. It still kind of feels like, the railroads in 1840, it's like, or the internet in 1995. You didn't know which, and it turns out a few of those companies survived, but most of them imploded, but the technology is still with us. So I think we're kind of in that, the 1995 era sort of the blockchain revolution. But anyway, as going forward, like VIX land, they're pricing this G20. Everything is stopping because of it. That's why VIX isn't moving. The market is moving up, but the vol keeps expanding in the near term. So even though VIX cash is down, if you look at, let's say, SPY volatility in, let's say, the June, they're actually taking a little tiny bits out of the July one. It's down like 20 cents or something like that. So July '01 volatility for that term is 16.5%. From live vol, that's kind of the average vol. And I think the at the money volatility is, what are they going to be? I'm going to say 16%. So the volatility on the July '01 291s is 1677. So they're looking for a 40 handle move, like through the weekend to Monday's close. That would not surprise me. Either woohoo, we have the Z. We're going to either have the Z and Trump love fest, or probably what everybody expects, there's nothing going to happen. Because how are they going to solve this? 1.5 year trade deal is going to be solved in a weekend. I don't see it. I think that is the improbable thing. It could happen, but I think it's improbable. Mostly it's just, we're going to agree and we're going to keep talking. We're going to try to figure it out. And then I think, maybe we sell off to a little bit below 2,900, something like that, 2,875 SPX. So vol is waiting for that event. I do feel since the Fed is responsive to the rate thing, this is the last biggie. So the market's kind of expecting a rate cut, at the end of the month of July. And this is probably the only vol event besides earnings, which generally depress volatility. So we could see a big move in VIX, as early as midday Monday. And that's kind of what I'm positioning for. So I'm either going to be super right or not right. Well, we'll see what happens. But that's, if you're expecting much to happen between today and tomorrow, unless some major announcement is, I think tomorrow will look pretty much like today looks.
You heard it here first, or perhaps second, or maybe even third. We shall see. But big move in VIX land, perhaps even by Monday. Of course, you're right. There's a lot going on out there, and it does seem kind of silly that they could somehow solve all of these differences. Now they're meeting, and so it's all will be swept under the bridge. But crazier things have happened, sir. The market's certainly pricing in something, some other shoe is about to drop sometime, perhaps as soon as Monday. Mr. Uncle Mike, sir, do you concur with that? And what else is out there lighting up your tape, sir, while the Rock Lobster grabs his shotgun to go scare off the varmints, the pests, the bandits?
Definitely agree on the what's going on with this weekend and everything. But I do want to go on record. I've done a lot. I do want to give a very in-depth analysis of Bitcoin and my opinion of it and the future of it and that type of thing. And I just want to be very blunt about it and just give some very educational thoughts on it from my perspective. Bitcoin sucks. That's basically
so the resurgence hasn't changed your opinion any, sir?
No, not at all. So that's just, I want to go on record whenever we have some type of talk of it. I want to go again and just say my opinion of where it is, what it'll do. I've ranted on it in past shows enough, so I don't want to go on it anymore, but just want to reiterate my opinion on the subject nonetheless. So that's where I'm at. Yeah, I think today and tomorrow in the stock world, it's really going to be not a ton of movement, but the reality of it is today is that we do have a 0.5% move in the S&P approximately. So there is something going on a little bit. So it's not totally like watching paint dry, which that's always a fun thing to get a little bit of movement in the marketplace. A lot of the movement, I think we're probably what's holding it back would be the information from Boeing holding off the Dow and the fact that the industrials really aren't moving that much right now. Technology's not moving. Where we are seeing movement today is from the financials. XLF, the financial ETF, is actually up over 1% on the day. So that's where a good portion of some market movement is coming from today. I think that we're at a point in the marketplace to where this is another test of the all-time highs, or we're like roughly 50 S&P points away from the all-time highs again. And so I do think that is always a barrier when we can't quite break through it. But right now we have two barriers, in that we have the all-time highs and we also have the 3,000 mark in the S&P. So something to be concerned with. But if we do break through those levels, then we're at all-time highs again, and it's always an exciting time in the marketplace whenever I get to say my trademark slogan when we have the all-time highs in the show. So things I'm watching in terms of how I'm positioned and where I'm at with this, I'm going to kind of go over that a little bit in the strategy block.
All right, and while you were talking, I just shared your words of wisdom on Bitcoin with the world, sir. So be prepared for the washed and unwashed masses of crypto to be beating down your door. I did not include your St. Charles Wealth. Are you actually going to use that handle on Twitter? Is that actually you, or is that just a dead place? I want to send people there so they could share their very angry opinions with you, sir.
No, just send them to my email. It's the Twitter thing. It's just there's issues with compliance on that, so. Tell them if they want to dispute my Bitcoin thoughts, then tell them to email me directly.
I don't know if you want to give your personal email or your work email to the unwashed Bitcoin masses. So you think the gold bugs are bad? The Bitcoin bulls, they're out there, and they will let you know what you think of what they think of your opinion of all things Bitcoin. Let's see what they think about what's trading out there. What is actually lighting up the markets today? Like we said, kind of a weird day. Everyone's kind of in a bit of a wait and see mode out there. The market's kind of doing something similar, but decent volume, not huge volume, but decent volume. Coming into showtime, we saw VIX with about 250,000 contracts on the tape. The ADV is just falling off a cliff over the last couple of weeks. We were out there threatening 700,000 there for a while. Now it's substantially less than that, just a little bit over 400,000 right now. So quiet times in the vol products. Again, everyone's kind of playing wait and see, so maybe not a huge surprise there, but still a huge move. ADV change of about 300,000. That's big. SPY, same thing, 850,000 on the tape. ADV about 2.8 million, so not quite a third up there yet. SPX about 450,000 on the tape. ADV about 1.4 million. The Qs, 273,000, ADV 773. So pretty light day for the Qs as well. And the Russell, $120 on the tape, 310. Is their ADV. If you know about Russell and you listen to Twyphone a little bit, you'll know about all things Russell Recon coming up in a little bit. That, of course, is a huge volume moving day for probably the biggest volume event of the year from a market perspective. It moves billions of shares in the fraction of a second. It's a pretty impressive thing when you think about it. And so we'll be talking about that a lot more on Twyfo coming up in about an hour. Let's see what else is lighting up the tape here before we move on into the odd block. Let's look at our top 10 here in individual equity options coming into showtime here. We saw top 10 again, kind of a light day. Number 10, only 70,000 for Intel. 70,000 on the tape for Intel. Number 9, Bank of America, 93,000. Number 8, 96,000 for Facebook. Number 7, good old NVIDIA there with about, NVIDIA with about 103,000. Number 7, by the way, that was number 9 was Boeing. Boeing was number 9 here. I see Bank of America so often on this list. I see BA, my mind immediately goes to BAC, but it is Boeing. Number 7, NVIDIA, of course, 103,000. Number 6, Tesla, 104,000. Number 5, BABA, 105,000. Number 4, Bank of America, where it belongs, BAC, 112,000. Number 3, Micron, $147 on the tape. Numero 2, AMD, 177,000. Number 1, yet again, 180,000 for Apple. Let's see the most biased flow here. BABA is about 70% to the call side, 74% for Intel. So light flow, but 74% of it to the upside, the call side, I should say, out there in all things Intel land. Speaking of all things out there, let's see what's going on in the rest of the options market and some of the weird stuff. Let's get into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. This is indeed the portion of the program where we break down the weird, the wild, the whimsical, the strange stuff going on out there in the world of options. Speaking of strange, let's look really quickly out here. Quick check-in on the weird paper that lights up the Tesla tape. Tesla, let's see, coming into showtime today. Let's see exactly where they are lighting it up right now. It's another day that ends in Y, so Tesla probably doing something. 220 up, not quite a buck today, so a rare quiet day for Tesla, but still about 10% north of that 200 handle that everyone was so worried about not too long ago out there in Tesla land. And let's see exactly what is afoot out there from an options perspective. We know for a while now it's been those puts. Those puts, go figure, spoiler alert, went off the tape. Those June 50 puts, they did not work out, I'm sorry to say. There were close to 80,000 of those open going into expiration. And yeah, they did not work out well. Now the June pars and the June 50 puts are gone. So it's all Jan all the time pretty much. Actually, I take that back, with the exception of some weeklies. But first, the Jan 50 puts with about 64,000, so taking up the new number one spot. Number two, numero dos here, the Tesla par puts, 45,000 on the tape. Number three, the June, expiring on the 28th, so tomorrow, 210 puts. They actually have a chance. There's 41,000 of those bad boys open. So a 10-handle swing in Tesla in a day, not at all unheard of. So these puts still have a fighting chance. I shan't write them off yet. Number four, the Jan 10 puts, 40,000 of those. And number five, the July 250 call. So there are some calls here. 33,000 of those open. So there still is some upside in Tesla, but most of the action is downside. Ahoy. Let's go on to see what lit up our Eye of Sauron today out here in the marketplace. First off, this looks like, I believe, a bit of a newcomer here to the odd block. Let's check in here. Actually, this name sounds familiar, but I think it's been a while since we talked about this one. This is Vistra Energy Corp, ticker symbol VST. This one trading today $22.24, off about a fraction of a penny. Not a huge underlying move day for VST. Let's see what caught our eye out here. Well, let's look at the chart first. Going back a year, it was trading a little bit north of where it is right now, about 23 and change, so not a huge move from where it was. But over the course of that year, it had a lot of peaks and troughs, getting up to about 25, almost 26 in October, then selling off down to 21 again in the end of October. So it's kind of been in this interesting, mostly 22 to about 28 range, with a few moments. It broke outside 22 very briefly right around Christmas Eve, of course. The low of the year, 52-week low, is actually a little bit shy of 21, 2084. Then it got as high as about almost 28, 27 and change. But the bulk of the year was spent in this kind of 26 to 22 range, which is, range-bound names, kind of attractive for a lot of options traders. Right now, we're back at the low end, almost exactly that, right around 22 and change right now. So let's see what our Eye of Sauron picked up out here. I'm going to guess, because we're at the lower end of that range, probably call love, but you never know. Yeah, that is exactly what we saw. We saw the SEP 24 is lighting it up, one of the bigger single individual equity option prints of the day, which shows you kind of how quiet of a day it is. Only 5,000 of these going up. That brings it to the top of our radar on an otherwise quiet day here. 5,000 of these SEP 24s going up for 55 cents. These things are 40 cents at 55, so lifting the offer 5,000 times over there on the SIBO. So they trade things other than VIX and SPX at the SIBO, for those of you out there who were wondering about such things. There are earnings in this cycle. They are August 5th, so earnings are included in this bad boy. A little bit of some earnings juice. So Mr. Rock Lobster, here we are at a name, 52-week low, or right about thereabouts there, and we're looking at some calls, two handles out of the money, going out to September, paying 55 cents for them. They're an earnings cycle in there as well. It's not the worst trade I've seen in the odd block, that's for sure. You like these?
I know, we have seen bad ones.
We have seen many bad ones. That is sure. That is definitely
this is totally
the case.
Reasonable to me. Like this whole energy thing, ultimately a lot of these stocks just haven't recovered from, 3 or 4 years ago when oil prices fell from $100. So the space in general has become a lot more difficult to figure out. But this is one of those, I think somebody does like really not very in-depth technical analysis. They go, oh, it was $27, it's $22. I'll buy some of these calls because I think things are going to bounce like a rubber biscuit. So, I have found it's really easy for stocks to get back to where they were. And I think this is somebody using that very unscientific technique to try to figure out. So certainly a reasonable call purchase if you're going to purchase some out of the money calls. Give something an easy target to hit. That's what I would say on that one. So not a terrible idea. Not a terrible idea at all.
Yeah, sometimes we damn things with faint praise here, but this one, reasonable is not bad. Not a bad rating here for the odd block. We've seen some weird ones. So reasonable, he's not outlandish, he's not spending a ton of money on it. He's not expecting this thing to double over the course of the next week or anything crazy like that. He spent a reasonable amount of money, gave himself a reasonable amount of time, and his strike selection is fairly reasonable. I think reasonable is a great way, a very apt way to describe this trade. Let's see if our next one falls into this. For this one, Mr. Rock Lobster, we're going to go back. We're going to go back in the way back machine, but not that far back. Maybe more like the mid-back machine back to May. So about a month. We're going to dial the handle all the way back to May 20th, listeners, to look back at some line in the sand. I know Mr. Rock Lobster likes himself some line in the sand puts, so we're going to check in on some line in the sand puts that we profiled about a month ago in Kroger, ticker symbol KR. Kroger today trading about 21.5, up about 16 cents. This is the name that's kind of been all over the place over the course of the last year. A year ago, it was trading 28.5, so substantially north of where it is right now. Got up to as high as about 32, almost 33. That was back in September of last year. Then it kind of had some peaks and troughs, sold off again to about 27 in October, then back up to about 32 in November, and then back down. It kind of had a nice little range for a while there until it hit about March, I'm guessing around earnings time, because then it fell off from about 28, 29, all the way down to about 24, and then it kind of established a new range around there, and it's kind of been drifting lower ever since, right back down to where it is right now at 21.5, so at the low end here of its 52-week range. What we profiled back on May 20th was someone perhaps thinking that was the bottom of that range, because we profiled at the time 10,756, so a pretty large block of the July 26 puts going up for $2.43 through the bid. That's how aggressive this guy was to get these done. These were $2.47 at $2.52. They went up at $2.43, opening, again, almost 11,000 times. And if you paid attention to what I just said, you know that this one did not, that line in the sand did not hold very long, because we're trading at around 21.5 or so right about now. So well below that line in the sand. And worth noting that these bad boys actually traded quite a bit. They traded that day, that block we saw was almost 11,000, but total on the day they traded nearly 17,000. And then the next day, the 21st of May, they traded 25, almost 26,000 more. So the total OI was coming in was about 37,000 after those trades. So someone drew a pretty sizable line in this 26 sand here. And it's worth noting that this one, at least so far, if their intention was to buy the stock a little bit shy of 26, then that intention has come to pass, because these puts are still open. They're trading about 460 right now, so pretty much double what he sold them for. So this guy is out some money here, but he has the stock that he wanted. And checking in at the open interest, yeah, these bad boys are still open. There's about 30,000 of these puts still open on this strike right now. So Mr. Rock Lobster, sometimes when you draw the line in the sand, that line is crossed. And then the question becomes, what do you do next, right? Do you really want the stock at that level? That will certainly give you that question. That will certainly keep you up at night saying, do I really want the stock there? Or do I want to roll these and maybe take my hit and roll down a little bit? It seems like our friend here wants himself some stock at about 24 and change. Is that your take as well, sir?
It is my take. And I keep thinking Kroger is one of those ones where, they're like one of those stocks that have not quite recovered from the whole being Amazon. Amazon goes Whole Foods, they compete directly. Kind of a lot more of a tough nut with this one. As far as, I don't know if it's a particularly well-managed company or not. I don't follow it that much, but people I think are trying to play that bouncing Amazon game where Amazon comes in, like, we're going to Amazon your business, and they crush it. And then, line in the sand puts on a bounce makes total sense to me. And then, all of a sudden you get they don't recover from the smothering that they're going to get. So I think this is one where that's definitely that's a thing where I don't know how much money they're going to make. The stock does look like it's doing a little better. So I mean, as far as like earnings wise and stuff, it's kind of catching its breath, like a really low multiple. And essentially, they're priced for failure. Like these businesses are just going to have a really hard time going going forward. I'm not sure that's the case with Kroger, but it does look like somebody has put their line in the sand, and they're, and they're kind of, they're wearing it a little bit on this one. And I think they'll be happy at this point since their puts just get back to parity. The calls, on the other hand, don't look like not much is going to happen with that. So maybe it almost felt like that could have been a takeover trade or something. But as of right now, they're trying to see what happens, and it looks like they're going to own themselves some Kroger.
Yeah, they're going to own themselves some Kroger around 23 and change. Not the worst level, about a couple of handles north of the 52-week low, so not terrible. But you're right. The only issue I really have with this, not so much the level, is just the name. I don't follow this space as like you. I don't follow this space aggressively, but I have a hard time seeing Kroger making this huge aggressive turnaround in the near term. But maybe this guy watches this space. Hopefully he does. He's bought a ton of it, so hopefully he follows it more than we do, and he sees some bright lights for the future here, because he's going to own himself some Kroger at around 23 and change coming up pretty soon here, unless the worm turns quite a bit here. So yeah, sometimes listeners, those lines in the sand are crossed, and then the question becomes, what do you do next? Our friend here seems like he's got some time left, but it seems like he's taken himself some stock. Let's move on to our final name here. This is another one kind of in the food area here. This is Conagra Brands, ticker symbol CAG, C-A-G. Trading today, $25.77, off about $3 and change, about $3.20, so nearly 11%. So not a great day here for Conagra Brands. This is another one that's kind of been all over the place. A year ago, it was trading about 10 handles higher, 35.5 or so, and then it kind of stayed up there for a while, then got clipped a little bit down to about 33, then right back up to 36 and change. The 52-week high was actually 38.5, so it was up there for a while, and then around November into December, things started turning around, and then bam, Christmas Eve hit, and it was down to about 20 and change, and then it kind of stayed around there for a while, listeners. They got back up to 24 in February, and it was kind of floating around 23, 24. Then it shot back up to 27 again in March, and then back up to 31 and change back in April before kind of settling off back where it is right now at about the 25, 26 range here. But again, not a great day here for Conagra. Let's go out here to see what our Eye of Sauron discovered here for us. I was feeling puts given the trend, and that's pretty much what we saw out here. The SEP 23 puts going up for 30 cents. It's an interesting one. They were 25 cents at 50, so a fairly wide market, but not an unacceptable market given the fact that these are not exactly the most liquid of puts out here. So 25 cents at 50. They went up for 30 cents. Probably someone finding themselves a little bit of a bid. These are opening over there on, I believe that's the box here, looking at, yeah, these are post-earnings. Earnings were today, obviously. So someone may be deciding to get the heck in there for September on the 30 strike, on the bid, draw a bit of a line in the sand after the vol event, after the earnings event has transpired here. So the 23 strike for 30 cents, I mentioned right now we're at about 25.80 or so, off about 3 handles. So interesting. Looks like it has the feel, Mr. Rock Lobster, of another line in the sand. We just saw how well those can go in our last name here. So our friend here maybe just drawing another more aggressive, farther out of the money line in the sand here. He's got about 5 handles and change for it to go, and getting 30 cents to do it. Do you like this one here out to September, a line in the sand in the CAG SEP 23 put, sir?
Well, Conagra, now aren't they they produce all kinds of stuff, right? you're like Andrew, you're so exact. But this is one where don't we have that hard? We've had some pretty difficult. Corn, I think, has been difficult this year. In their inputs of product, difficult. So it's like a tough year. So they might suffer a little bit more on that. So I think the stock getting smoked. It does. It's a little line in the sandy like that, and with the stock kind of having a really difficult time here. So. If you want one of those, what I would call more commodity type stocks, I mean, when do you buy them, right? You buy them when, the cost of input is really high, which is kind of right now. So it feels like that kind of a trade. am looking at that, like Tyson had a bounce similar to that. I mean, they're not exactly the same business. Conagra is more finished food, but it's the same kind of idea where, you're looking, wow, corn prices are going through the roof. Nobody can plant corn. And what industries get smoked by that? So, and usually those are transitory things. They don't last forever. It's hard to believe next year's rain will be as bad as today. So, you're trying to get in on a commodity, a stock at kind of the low level. So it feels it feels like that kind of a trade, and it has a good shot to work.
Yeah, they missed their earnings pretty aggressively, and a lot of it was, you're right, due to some of those quote-unquote input prices that could be so deadly in the times like this. We'll get into maybe some more of that. On TWIFO, what's going on in ags? Meanwhile, it's time for us to keep on rolling into the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody.
By all means.
All right, everybody. Welcome to the Strategy Block. This is, of course, the portion of the show where Uncle Mike holds court once, sometimes twice a week on various topics. Uncle Mike, sir, what do you got up your sleeve for us today?
Selling a short put spread versus selling a levered out of the money put. So what I want to go through today is oftentimes whenever I sell a short put spread, which I did recently in my aggressive strategy. I oftentimes think of many years ago, I kind of would debate myself in my head, well, am I better off selling a short put spread? Or let's say I'm not an IRA, am I better off really leveraging myself, selling a short put, so that way I don't have to pay for the hedge leg of the spread? And thankfully, I've gone more the short put spread route through the years by choice. And so I want to explain kind of the ups and downs of it. First off, the benefit of it. If God were to tell me the market's going to go higher, and just so you know, God doesn't tell me such things, but if God were to tell me the market was going to go higher, there's no doubt you're better off selling a short put and not bothering buying the protection on it. You're better off that way, in my opinion. Well, there's no question about it, because God's always right. And if God tells you the market's going to go up and it goes up, there's no doubt you're better off. If the market's going to stay the same, you're probably better off. You are better off because you don't have the protection on it. When I talk about selling a levered short put, I'm talking using leverage to the hilt, either doing it in a portfolio margin account or doing it in using a futures option, whatever the case may be. I'm not talking about a cash secured put where if, let's say, the stock's at $10, you sell the 10 put, you have all $10 in your account. Nope. I'm talking about leveraging yourself. So now let's talk about why I've decided through the years to favor selling a put spread over selling a levered short put. And the reason is actually pretty simple to me, and that is the benefit of the volatility in the hedge leg of the spread. So here's what I mean by that. Let's say that the market were to stay the same or go higher. Well, you're going to make a little bit more money if you were to just do a levered short. But the problem is that when the market goes against you, which it will at some point, you're going to lose. The amount you lose is going to far exceed the amounts that you make when the market goes your way. So here's what I mean by that. Number one, let's say we have a major catastrophic downturn. That one's fairly obvious in that you're better off in a vertical put spread because of the fact that you have the hedge leg to protect you. But oftentimes what I say on this show is whenever you're selling a short vertical, rule number one, don't let it go in the money. Rule number two, don't forget rule number one. So with that being said, Mike, how on earth does this long hedge leg help you if you're constantly telling us not to let it go in the money anyway? Well, let me tell you. Whenever the market goes down, if we have an inverse relationship with volatility and market movement, volatility is going to go higher. And that long leg of the credit spread can actually help you in making it so you don't lose that much money. So here's what I mean by that. Oftentimes I've heard Other people say they don't like selling a short vertical put spread because you are buying an instrument with higher volatility than you are selling. So in other words, the vol typically on the long leg of the short vertical will actually be higher. Well, it's not always feeling like the best thing, but I like it that way because, and I didn't like it that way at first, hence the reason and this is 10, 12 years ago, I didn't like it that way at first because I thought, oh, well, I can make a lot more money doing these levered short puts. Thankfully, I didn't do too many of them throughout my career, but I didn't like it because I felt I was at a disadvantage. But I say that the disadvantage is actually the advantage. Here's what I mean. Whenever we have a downturn in the marketplace, volatility will react and make the options of the put option value based on the vega of the put options typically go higher. So it's because of that, the gains that you make in the hedged leg of a short put spread, it actually can save you money throughout time on your losers. So what I want to emphasize right now, because I'm actually in one of these at this stage, is that if the market were to go down to my level, which it might, you never know. I put it on 2 days ago. If that were to be the case, then yeah, I would be in a losing trade, no doubt about it. But if the market were to go down to the levels where my short put is, the volatility in the long leg of the put, I can't guarantee this, of course, but just based on the long-term typical inverse relationship of implied volatility and market movement, the implied volatility would help me and save me and make it so the put spread loss would not hurt quite as bad. So food for thought when selling a put spread, if you ever feel like, oh, I hate selling a short put vertical because I got to pay for all this volatility in the hedge leg, well, I think that hedge leg volatility can really help you if it goes against you. Now, granted, there are certain times to where I would let a short put spread go in the money if I'm doing like a smaller amount of risk on the table or taking a flyer or something like that. But for the most part, when I'm doing my aggressive strategy, I don't like them to go in the money. So with that being said, the volatility is what can really save you on the hedge leg of a short vertical put spread. And that is the strategy block for today.
All right, and let's keep on rolling. It is Thursday. Let's get a little bit of your mail, your questions, a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. This is indeed the portion of the show where we answer your questions. A lot of times those questions come to us through the medium that is Fidelity. You guys are always hitting up the strategy desk over there, asking them tons of questions. Mr. Last Emperor, I hear a rumor. A little birdie's been whispering on my shoulder lately that a lot of calls, we had some interesting calls from you guys of late. You guys mentioned box spreads. Everyone and their mother all of a sudden all fired up about box spreads. Now I hear the latest hot thing coming in on the old Fidelity hotline is vol skew. Is that the case, sir?
That is correct. And Uncle Mike did such a great job explaining actually what exactly happens, right? And that I was thinking that this topic probably is worthy of a strategy block in and of itself. Was going to come back on any given Monday and do a little bit more work for you. But Uncle Mike basically nailed it right on the head with his discussion about vertical put spread. So when we're talking about implied volatility skew, in essence, we're just referring to the fact that options for the same underlying have different implied volatility values for calls and puts, and at different strike prices. So you could have skew, obviously, in a vertical way, vertical sense, meaning the further out of the money you go with puts, the higher implied volatility values get. Or you could have, vertical call skew, where the further out of the money with calls you go on the same expiration, the higher the implied volatility values get. You could also, of course, have horizontal skew, which can exist based on either some sort of an event being priced in between now and a specific date for expiration. We commonly see horizontal skews in underlyings where they're about to report earnings, let's say. So if there's an earnings cycle before the expiration of an option contract, that say the front month, the back month is going to have lesser values in implied volatility terms. So you could, of course, have a combination of these things. You could have horizontal skews as well as vertical skews. Why are we mentioning this topic? Why is it so important? Why has it been on people's mind? Is for specific reasons, just like Uncle Mike, very eloquently pointed out. Obviously, what I would recommend for traders is you want to get to know the underlying that you actually want to trade. By that I mean you want to make sure that volatility analysis is a part of every options trade that you make, since we do expose ourselves to volatility with options, whether we like it or not. Understand that the skew exists for specific reasons, generally driven, I would say, by market participants and their behavior. Choose a strategy that fits your outlook based on what you see on that options chain when you're viewing it. Now, Uncle Mike pointed out that if you have a vertical put skew, an example of that, kind of a common thing that we generally think about, or it comes to my mind at least, is SPX or SPY, right? Any product that tracks the S&P 500 is going to have that vertical put skew because, obviously people are reaching for hedges based on their specific targets or risk tolerances on the downside, and there's a lot more demand for downside puts than it is to closer at the money puts. But it can, work in the other direction, of course, right? Uncle Mike mentioned if the implied volatility, explodes. So VIX in this sense, if we're looking at SPX, if VIX explodes and the market actually does go or head a lot lower, that implied volatility expansion in the lower leg expands even further, right? And protects you from losing as much as you would be losing if you just did the short leg by itself. So just be aware of it, how you position yourself and what strategy fits that particular outlook of yours, right? If you're thinking about overpaying or underpaying, that's the idea that, if you are putting on a protective leg, you would be paying more implied volatility terms. The exception in SPX would be if you're doing a bear call spread, a vertical call spread. The further out of the money calls actually have lower implied volatility than they do, because obviously the demand for speculative way out of the money calls is lower in SPX. I assume because the fact that the majority of the world is already exposed very long to equities in general. One thing that I do want to harp on here is the fact that, let's say that you're thinking about that bull put spread, right, in SPX or any other underlying that's tracking the S&P. Understand that generally when I'm speaking to my clients, they start finagling their risk profile because they see that the puts that are closer to the strike that they're selling are actually more expensive. So they start going out further, expanding that risk profile. If there is a significant amount of implied volatility skew, you're not really doing yourself any favors by just widening out the strikes. You definitely might want to consider size adjustments instead of trying to get to that point to say, well, I'm just going to widen out my strikes because that's the amount of credit that I'm looking for. So it's kind of diminishing returns, right, for each point of risk that you take, the lower you go. At least that's the way it feels in the S&P 500. Some of the interesting skews that have the opposite vertical or horizontal and vertical is VIX. Obviously directionally biased, inversely correlated to the S&P. So, VIX would have a very high vertical call skew. VIX options that are tracking the VIX futures, of course. A volatility smile in a product that I generally use as an example is gold, and I track it by the ticker GLD. So it has a volatility smile, meaning the further out of the money in calls or further out of the money in puts you go. They're pretty much equal. And then one of the weirdest ones that I've seen, and I've actually gotten a couple of calls on it, is Beyond Meat, given the fact that right now at Fidelity it does carry a 99% borrow rate. If you can find short shares, obviously folks start thinking about, shorting it synthetically. Markets are not stupid. They recognize that, right? So you have a very flat skew actually in calls and puts, but the puts, the further out in time you go, are a lot more expensive in volatility terms. So you kind of see a Z-shaped skew there in Beyond. So that's kind of my 2 cents here, and I hope everyone in the audience finds this helpful. It's important to know and understand exactly what you're trading and how you're positioning yourself.
Well said, sir. And we're pretty much up against it here for showtime, so we're going to do a quick combo kind of around the block and a mini plug segment at the end here. Let's start with Mr. Rock Lobster. Sir, what are you watching for the rest of this week? And if people want to learn more about what you guys are doing over there in the land of the pit, where should they go? What should they do, sir?
Well, of course, I'm watching the paint dry because the paint will dry unless we have some surprise announcement until tomorrow. And I'm looking forward to winning the crystal ball and getting down to the 14 handle, but I don't think that's going to happen either. You do remember the exact literal bullseye that was there on Monday, but don't you? Yes, I do. It pains me to think about it, but I try to push I try to push bad thoughts to the back of my head and move forward. It
makes me wonder, why am I not doing a vol newsletter? If I wasn't too busy talking to all these shows, I'd have my own vol newsletter. I'd call it the Bullseye. What do you think? The Bullseye.
Well, it's certainly it certainly is a good start. Hitting a bullseye for Vic certainly doesn't hurt. And as far as what's going on Option Pit, that's a good question. I mean, we're kind of a quiet week coming up, 4th of July. Look for a new class out of us. Just go to optionpit.com. Oh, one thing I'll say. If you're interested, we are having a sale on our store. We're sending that news out. We just revamped our store. Basically, almost any option topic you want, you can get in our store. And if you're interested, we could give you 50% off on any store item that you want. So send me a note, andrew@optionpit.com, and I'll make sure you get that. So in honor of having the new store look awesome, we'll put that out there just as only people listening to the Option Insider Radio, though, will hear that right now. But send me a note, andrew@optionpit.com, and I'll get you the code.
50% off.
The there you go.
Wow.
50% off in the store.
I haven't checked out the new store. I'm sure it looks cool. Check it out. Listen, that's obviously good savings. 50% off. Take advantage of it.
It's much cooler than normally, so everybody's going to anyway, we'll see what happens.
They always trust me as someone who's still undergoing an ongoing web redesign. People are always hand wringing to be done, sir. All right. And someone who will never figure out his social media side, but at least his website works. Talking about Uncle Mike. Uncle Mike, what are you watching for the rest of this week, and where can folks go? Obviously not on Twitter, but where can they go to learn more about all things St. Charles Wealth?
By all means. stcharleswealth.com to learn a little bit more about what we do here. More than happy to work with people. I'm a financial advisor who is really, I kind of like this new option product thing. It's been around for about 40 years now on the equity side of it. So, oh gosh, almost 45 years, I think. But I'm kind of excited about this new option fad. Would love to work with people. Feel free to reach out to me. And in terms of what I'm watching, all-time highs, the 3,000 mark in the SPX, and I'm watching fireworks next week. God bless America.
There you go. Patriotic as always. Last but not least, Mr. Emperor, if people want to hit you up about all things Fidelity, and maybe they want to learn about what you're watching for the rest of this week, what are you watching? And also, where should they go if they want to learn more about maybe some skew or some box spreads or whatever else you guys are talking about over there at Fidelity these days?
Very good. Ladies and gentlemen, I would definitely encourage you to visit fidelity.com/options. You can apply for options trading there, find a lot of learning and educational material on there. Of course, fidelity.com/coaching. If you're interested in some of our daily run coaching sessions that we do, you can always, of course, set up an appointment if you're a Fidelity client by just calling your regular service team and requesting an appointment with the strategy desk. Mention me by name. I'll be delighted to reach out to you within 24 to 48 hours. In terms of what I'm watching Constellation Brands earnings. That's tomorrow. They're pricing in around a $10.50 move. That's around 5.5% of ticker symbol STZ. So it should be pretty eventful. If you enjoy a Corona or a Negro Modelo once in a while, you probably have a little bit of a stake in this brand. They own all sorts of things, so I'll be watching those. And of course, the G20, I think, will be interesting. Tomorrow is a quarter end, month end. All sorts of rebalances are going to be going on in the Russell 2000 and S&P 500. So I'm very curious to see if the volume actually picks up in trading going into the weekend.
There you go. Fidelity.com/options is the place to go. Tell them we sent you. They'll certainly like to hear from that. Give a call over there to the Last Emperor and Trey and Colin and Brian and the rest of the crew. They love to hear from you as well. Ask them about box spreads. They love talking about it. And on behalf of the Last Emperor and the Rock Lobster, who's off chasing away those clam poachers as we speak, and Uncle Mike, who can't figure out social media, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live. Hopefully it worked. It seemed like we had some fluctuation in there, but it seems like it seemed to hold steady the whole time, so hopefully you guys are able to listen live. If not, podcast is your friend. If you are listening live and the stream held up, we'll be back in about 25 minutes to talk about all that Russell volatility that's coming up, as well as a lot of other good stuff. Bitcoin, it's moving. So we're probably going to talk about that a little bit on Futures Rundown. Everything else, Futures Options Rundown, that's coming up, TWIFO, in about 25 minutes. Otherwise, we'll see you back here on Monday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.